Let's bring in Tom Forte. He's senior research analyst at D.A. Davidson. If it's such a big pullback on a day like that, I imagine if you have a strong stomach, today is the day to buy. Tom, is that what you're suggesting that we do, or do you think that's just the beginning of more down days to come in our near future?
All right, so first off, I do think that a elongated period of elevated inflation with the Fed continuing to raise rates to combat inflation is a very challenging background for technology stocks. You think about how historically they have higher multiples, higher valuations than other stocks within the indices, and rising rates is a challenge. I do think that there are some opportunities with Apple and Amazon, and I'm happy to discuss those if you're interested.
Yeah, I guess, before we get into sort of the particulars of the individual names, I have more of a bigger question. I understand the theory of higher interest rates pulling down the growth names. Of course, the big cap tech stocks are the first ones you think of it. But even if you have a period of elevated inflation, are you really going to see an enterprise client, a big business, pull back on its spending of the Amazon cloud or Microsoft enterprise software? I mean, don't you need that to run your business? I mean, how much really is profitability potentially hurt for these companies? Or do we have to go one by one to talk about it?
So the good news is, if you looked at our white paper, Dude, Where's My Dollar, where we talked about inflation, think about Roku with cord cutting as providing consumers an opportunity to save money in an inflationary environment. And as you just pointed out, Amazon with its cloud computing effort enables enterprises to save money on their infrastructure investment. We saw Amazon work with companies to scale back their spend during the height of the pandemic. So I do think as it pertains to cloud computing, as it pertains to Amazon, that high margin revenue might be more durable, which makes Amazon shares attractive today.
Are they more attractive now that Amazon had lost $98 billion in market cap in one day?
The answer is absolutely yes. So to the extent that, buying on dips, things of that nature, I know that sometimes it's counterintuitive and I know sometimes it's emotionally difficult, but you want to take advantage of market sales to either initiate a position or buy more. And the answer is yes.
Courtney may understand exactly why inflation and rising interest rates affects this category of stocks more than it does, say, energy stocks or utilities, or used to be utilities. It was rising rates were anathema to utilities. But can you explain in a few phrases why it is these titans of tech that get whacked when you have surprises on inflation and rising interest rates? What is it natively about them that makes them more vulnerable than, say, a Procter & Gamble or name it?
Well, I can tell you in 2022, and the story's been the same for a couple of years now, where's the inflation coming from? It's coming from supply chain. What does Apple do? Sells a lot of products that they import that are assembled in China. So this inflation makes it more expensive for Apple to sell products. That's why inflation is a bad thing for Apple. Similar for Amazon and their e-commerce business, to the extent a lot of the products that are sold on their e-commerce platform are coming from China. The inflation in supply chain is a problem. So I think that, a lot of the tech inflation right now is supply chain related. We've seen some signs of improvement, but it's still an issue.
All right. Tom Forte of D.A. Davidson, thank you very much. Appreciate the explanation there. Thank you for helping me.